traders, welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is May 21st, 2012. We have a lot to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. In the previous videos, we talked about this calculated line here being a possible support line, and I said we may actually bounce on Monday. I wasn't expecting it though, however, I wanted it to actually get down to the 200 moving average, but again, taking it a little bit on the cautious side, definitely underestimated this mathematical calculation here. Regardless, the fact of the matter is we had a nice bounce in the SPY today, as well as almost everything else except for financials, obviously, but we'll get into that a little later. What we have here is a bounce. I would not actually trade this because we are in a downtrend. So what do I mean by that? I mean that being that we are in a downtrend, at any time we could come down. I do have another mathematical calculation here, which is at 135.72. And so that means there's a possibility that we can get there before we actually come back down. So the question might be, why am I not going long here? It's because it's a counter trend trade. I was, the thing I was thinking about was, if it hits a 200 moving average, good, I'll go long. If it doesn't hit the 200 moving average and it bounces today, which it did, then that's also good because I actually want to short the market. You don't really want to be against the trend. The trend is your friend. You don't want to be against the current. You want to be with the current. So this is actually good news for me because I can enter the market a lot sooner than expected, right? So as soon as we come up into this level here, then it's a dead short for me, in my opinion. Okay, for the SPY, this is what I see so far. However, if we come up here and then we kind of pull to the side and we consolidate, that will give it enough power to break through this mathematically calculated level here, and then we could potentially hit double top. I wouldn't rule it out. I really don't think that it'll do that. I really don't think it has enough juice for it. But you never know, nothing's 100%. But as it is now, in my opinion, I think that we could possibly get to 135.72. I don't think we actually get there, but there's a possibility. This would be the next resistance line that I see that we could have a possible spike into. Okay, so that's the SPY. This is the chart of the US dollar. Let me load the drawings on the dollar here. I said we're going to have resistance here. We definitely got resistance, and as everybody knows, dollar up, market down, dollar down, market up. We do have a support level here, so if we can get into this support level here, then we should see a bounce in the dollar. And we also have these two moving averages coming up. So don't stay too bullish in this market, in my opinion. If you enter bullish tomorrow or the day after, you're definitely chasing. I would wait until we hit a good resistance point before actually shorting the market, because when you short the market, you're going with the current, so that puts the odds in your favor even more than if you were doing a counter trend trade. Okay, this is a daily chart of Apple. Apple came so close to this mathematically calculated level. In addition to that level, we had this pivot low over here. It came so close, but obviously we got a huge bounce in Apple, almost $31. We'll see a bit of a resistance point at the 20 moving average, and of course at the 50 moving average, and not to mention this pivot point up here. And worst case, Apple goes all the way up here. Again, we're just gonna have to follow the markets, because right now Apple is trading with the markets. Actually, all stocks are, not all, but 90% of the stocks are trading with the market, except for we have this chart of JP Morgan. All right, so JP Morgan, don't mind all of these green lines over here. These are just resistance points that I was looking at if I were to take the trade here. Now, JP Morgan has come down even though the markets were strong today, and it is right now in a gap fill, and there's a lot of support in this area here. So JPM could get a spike up tomorrow. That is a possibility as long as the market stays strong. However, I do have a mathematically calculated level here. If JPM can get down here, okay, that's if JPM can get down here, then I'm taking a trade to the long side, provided it does that soon. I doubt it does, because it's at 32.51 and this level here is at about $30. That's $2.51 down. We have a I honestly don't think that we can get there. We have an ATR of $1.38, so there's a possibility, but it's not really a probability. Okay, but again, if JP Morgan can get down there, that will, and we do get a bounce off this level here, then that will give a bounce to the finance sector as well as the markets, meaning the market should push even higher if JPM can get a bounce. As we all know, JPM is the leader of the finance sector of all the markets. So, if JPM gets a bounce, then pretty much all the other finance sectors within the market, or not sectors, all the finance stocks like Bank of America, etc., should see a bounce as well. All right, this is a daily chart of IWM. Load the drawings. I had this in the previous videos. IWM actually pierced through the 200 moving average and this gap fill here and went right into this mathematically calculated level here. Again, these levels are just mind-blowing sometimes on how accurate it can be. Anyways, IWM came right into it, and then obviously today we got a bounce. So the next level, if we do come back down, will be around here. I have not calculated another level to the upside just yet, but I'll probably share that with you guys in the next video if I can get an appropriate level for the IWM. Okay. All right, we have a daily chart of F5 networks. I just kind of wanted to show you guys this. The mathematically calculated level is, it can be very helpful, but those are more, I wouldn't say max moves, but more on the cautious side when these things are created. F5 today actually was unable to make it there. It did come down a little bit, but it wasn't unable to really get to this gap fill and this 200 moving average. The next stop for F5, if it can continue higher, okay, is 122.77. This bullish engulfing pattern. This is definitely a beautiful engulfing pattern. The only thing I don't like about this engulfing pattern is if you look at the volume down here, I mean, it wasn't even close to what it was on Friday, which tells me that this move up could be kind of like a bull trap in some sense. Okay, but I'm not saying it's not going to go higher. I'm just saying you want to be cautious with it. You just want to be careful. And that goes the same for the SPY. I mean, if you look at the volume, it is definitely lower than the past 4 days. Okay, so we already had this reversal. Today was the actual action of the reversal. So the reversal from this volume here, I didn't really like this volume spike here. It didn't show me really that it was all that great. It was good volume. However, if we can get lower volume, say through say the week or so, and then we get some sort of a reversal candle in here, like something similar to a shooting star of some sort, on higher volume, say up here, then that'll be the reversal signal for me to go short, and that's actually what I'm waiting for now. So essentially, I will not be entering the market on the long side. What I'm going to be doing is preparing to take a short position and go with the current, which is the trend, and that is down at this time. Okay, this is your 7-minute market update. God bless to you all. Thank you for watching. We'll see you in the next video.